Question 1. Which of the following MSRB rules primarily governs a municipal securities firm's obligation to deal fairly with all persons and not engage in any deceptive, dishonest, or unfair practice? MSRB Rule G17. B. MSRB Rule G30. C. MSRB Rule G20. D. MSRB Rule G21. Answer: MSRB Rule G17. Explanation: MSRB Rule G17 is the core fair practice rule for municipal securities professionals, requiring all firms to deal fairly with all persons and prohibiting deceptive or unfair practices. This rule applies to all aspects of a firm's municipal securities business, including underwriting, trading, and sales. Compliance with G17 is fundamental to maintaining investor confidence and ensuring ethical conduct in the municipal market. Firms must always act in good faith and disclose material information to customers. Question 2. A municipal securities principal is reviewing the firm's advertising materials. According to MSRB rules, which of the following statements about municipal bond advertising is true? A. All advertising must be approved by a municipal securities principal before first use. B. Advertising only needs to be filed with the MSRB if it makes specific yield claims. C. Generic advertising that does not mention specific securities is exempt from principal approval. D. Advertising does not need to be retained for record-keeping purposes if it is distributed electronically. Answer: A. All advertising must be approved by a municipal securities principal before first use. Explanation: MSRB Rule G21 requires that all municipal advertising be approved by a municipal securities principal before its first use. This ensures that all promotional materials are fair, balanced, and not misleading, protecting investors from potentially deceptive information. Furthermore, firms are required to retain copies of all advertising for the prescribed record-keeping period, regardless of the distribution method. This supervisory oversight is crucial for maintaining compliance and transparency in the municipal securities market. Question 3. Which of the following is not typically a responsibility of a municipal securities principal? A. Supervising all municipal securities sales activities. B. Reviewing and approving new municipal bond offerings for underwriting. C. Executing trades for institutional clients in the municipal secondary market. D. Establishing and maintaining written supervisory procedures for municipal business. Answer: C. Executing trades for institutional clients in the municipal secondary market. Explanation: A municipal securities principal's role is supervisory, focusing on overseeing and ensuring compliance with MSRB rules and firm policies across all municipal securities activities. Executing trades for clients is typically the role of a registered representative, not the principal. While the principal supervises trading activities, they are not generally involved in the direct execution of client orders. Their primary responsibility is to maintain the integrity of the firm's municipal business through robust supervision and compliance. Question 4. Under MSRB rules, how long must a municipal securities firm generally retain records of customer complaints? 2 years. B. 3 years. C. 4 years. D. 6 years. Answer: D. 6 years. Explanation: MSRB Rule G8 requires municipal securities firms to retain records, including customer complaints, for a minimum of 6 years. This extensive record-keeping period is critical for regulatory oversight and allows for thorough investigations of any potential violations or customer disputes. Maintaining these records ensures accountability and transparency in the firm's dealings with the public. Proper record retention is a fundamental component of a firm's compliance program. Question 5. When acting as a financial advisor to an issuer, a municipal securities firm is generally prohibited from also serving in which of the following capacities for the same issue? Underwriter. B. Placement agent. C. Remarketing agent. D. All of the above. Answer: D. All of the above. Explanation: MSRB Rule G23 prohibits a municipal securities firm from acting as a financial advisor to an issuer and also serving as an underwriter, placement agent, or remarketing agent for the same issue. This rule is designed to prevent conflicts of interest, as a financial advisor has a fiduciary duty to the issuer to obtain the best terms, while an underwriter's role is to sell the bonds. This separation of roles ensures fair practice and protects the issuer's interests during the bond issuance process. Adhering to G23 is essential for maintaining integrity in municipal finance. Question 6. A municipal bond quote disseminated by a dealer is considered a n. Firm bid or offer. B. Indicative price only. C. Offer subject to confirmation. D. Solicitation of interest. Answer B. Indicative price only. Explanation. According to MSRB Rule G13, a municipal bond quote disseminated by a dealer, unless specifically designated as a firm quote, is considered an indicative price only. This means the quote is an approximation and not a commitment to trade at that price. Firm quotes are required to be explicitly identified as such, ensuring that market participants understand the nature of the price information. This distinction helps maintain transparency and prevent misunderstandings in the highly negotiated municipal bond market. Question 7. Which type of municipal bond is backed by the full faith and credit of the issuing municipality, typically requiring voter approval? Revenue bond. B. Industrial Development Revenue Bond. C. General Obligation Go bond. D. Special Assessment Bond. Answer C. General Obligation Go bond. Explanation. General Obligation Go bonds are backed by the full faith and credit of the issuing municipality, which includes its taxing power. These bonds are typically used for projects that benefit the entire community, such as schools and roads, and usually require voter approval to ensure public support for the use of tax revenue. Unlike revenue bonds, which are repaid from specific project revenues, Go bonds rely on the issuer's general taxing authority. This provides a high degree of security for investors. Question 8. What is the primary purpose of the official statement OS in a new municipal bond issue? A. To provide a marketing brochure to potential investors. B. To serve as a legal contract between the issuer and bondholders. C. To disclose all material information about the issue and the issuer to potential investors. D. To register the securities with the Securities and Exchange Commission, SEC. Answer C. To disclose all material information about the issue and the issuer to potential investors. Explanation. The official statement, OS, is the primary disclosure document for new municipal bond issues, providing all material information about the issue, the issuer, and the project being financed. Its purpose is to enable potential investors to make informed investment decisions, outlining risks, financial condition, and terms of the bonds. While not filed with the SEC, municipal bonds are generally exempt from federal registration. It serves a similar disclosure function. Underwriters and dealers are required to provide the OS to customers who purchase the bonds. Question 9. According to MSRB Rule G32, an underwriter must deliver the official statement, OS, to a customer purchasing a new issue municipal bond no later than settlement date. B. Trade date. C. 5 business days before settlement. D. Upon request by the customer. Answer A. Settlement date. Explanation. MSRB Rule G32 requires an underwriter to deliver the official statement, OS, to a customer purchasing a new issue municipal bond no later than the settlement date. This ensures that investors have access to crucial disclosure information before their transaction is finalized. While customers can request the OS earlier, the rule mandates delivery by settlement to fulfill disclosure obligations. Providing timely and complete disclosure is essential for investor protection and transparency in the new issue market. Question 10. Which MSRB rule addresses the requirement for municipal securities firms to ascertain suitability when recommending municipal securities to customers? MSRB Rule G17. B. MSRB Rule G21. C. MSRB Rule G30. D. MSRB Rule G19. Answer D. MSRB Rule G19. Explanation. MSRB Rule G19 outlines the suitability requirements for municipal securities firms, mandating that firms must have a reasonable basis to believe a recommended transaction or investment strategy is suitable for the customer. This involves understanding the customer's financial situation, investment experience, and investment objectives. While G17 covers general fair dealing, G19 specifically details the suitability obligation. This rule is crucial for protecting investors from inappropriate recommendations and ensuring that advice aligns with their best interests. Question 11. A negotiated underwriting for a municipal bond issue differs from a competitive bid underwriting primarily because A. The issuer selects an underwriter through a bidding process. B. The terms and price are determined through direct discussions with an underwriter. C. The bonds are typically sold to institutional investors only. D. The issue is exempt from MSRB rules. Answer: B. The terms and price are determined through direct discussions with an underwriter. Explanation: in a negotiated underwriting, the issuer selects a lead underwriter and directly negotiates the terms, pricing, and timing of the bond issue. This contrasts with a competitive bid underwriting, where multiple underwriters submit bids, and the issuer selects the bid with the lowest interest cost. Negotiated underwritings are often used for complex issues or when the issuer seeks specific expertise from an underwriter. This process allows for greater flexibility and customization in structuring the bond offering. Question 12. MSRB Rule G37 addresses political contributions, pay-to-play, and aims to prevent excessive trading in customer accounts. B. Conflicts of interest in the underwriting selection process. C. Misleading advertising by municipal firms. D. Unfair markups and markdowns in secondary market transactions. Answer: B. Conflicts of interest in the underwriting selection process. Explanation: MSRB Rule G37 is designed to prevent pay-to-play practices, which are political contributions made by municipal securities professionals in exchange for municipal bond business. The rule restricts firms and municipal finance professionals from engaging in municipal securities business with an issuer for 2 years following a contribution to an official of that issuer. This prevents conflicts of interest in the underwriting selection process and ensures that business is awarded based on merit rather than political influence. Adherence to G37 is vital for maintaining fairness and integrity in the municipal finance industry. Question 13. Which of the following entities is responsible for regulating the activities of broker-dealers, banks, and municipal advisors in the municipal securities market, but has no enforcement power? FINRA. B. SEC. C. MSRB. D. Federal Reserve Board. Answer: C. MSRB. Explanation: the Municipal Securities Rulemaking Board (MSRB) is the self-regulatory organization (SRO) that creates the rules for municipal securities firms, municipal advisors, and banks. However, the MSRB does not have enforcement power. Enforcement of MSRB rules for broker-dealers is carried out by FINRA, while the SEC enforces rules for all entities, and federal banking regulators enforce rules for banks. The MSRB's role is to establish fair and efficient practices to protect investors and the public interest. Question 14. A municipal securities firm must maintain an accurate record of all agency and principal transactions. This is primarily required by MSRB Rule G15. B. MSRB Rule G12. C. MSRB Rule G8. D. MSRB Rule G9. Answer: C. MSRB Rule G8. Explanation: MSRB Rule G8 specifies the record-keeping requirements for municipal securities firms, including the obligation to maintain accurate and current records of all transactions, whether principal or agency. This comprehensive record-keeping is crucial for regulatory oversight, audit trails, and ensuring compliance with MSRB rules and other regulations. Detailed records allow regulators to reconstruct transactions, identify potential violations, and protect investors. Proper adherence to G8 is a foundational element of a firm's compliance infrastructure. Question 15. What is the maximum gift value that a municipal securities professional may give to a person other than an immediate family member per year, without violating MSRB rules? $50. B. $100. C. $250. D. No limit if it is not for business influence. Answer: B. $100. Explanation: MSRB Rule G20 on gifts and gratuities generally prohibits municipal securities professionals from giving gifts exceeding $100 per year to any person other than immediate family members, if related to the business of the recipient's employer. This rule aims to prevent undue influence and maintain fair business practices within the municipal securities industry. Exceptions exist for legitimate business entertainment, but strict limits apply to gifts. Adhering to G20 helps ensure that business decisions are made objectively. Question 16. The Electronic Municipal Market Access (EMA) system provides public access to a. Only new issue official statements and pricing information. b. Only secondary market trade data. c. Primary market disclosure documents and secondary market trade data. d. Issuer financial statements and bond ratings exclusively. Answer: C. Primary market disclosure documents and secondary market trade data. Explanation: the Electronic Municipal Market Access (EMA) system, operated by the MSRB, serves as the official source for municipal securities data and disclosure documents. It provides public access to both primary market disclosure, such as official statements, and secondary market disclosure, including real-time trade data. EMA enhances transparency in the municipal market by making crucial information readily available to investors and the public. This accessibility is vital for informed decision-making and market integrity. Question 17. Which of the following statements about municipal bond confirmations, MSRB Rule G15, is true? A. Confirmations must be delivered at or before settlement. B. Yield to call must be displayed on the confirmation if it results in a lower yield than yield to maturity. C. The name of the counterparty must always be disclosed. D. Confirmations are only required for principal transactions. Answer: B. Yield to call must be displayed on the confirmation if it results in a lower yield than yield to maturity. Explanation: MSRB Rule G15 specifies the information that must be included on customer confirmations for municipal bond transactions. Importantly, if a municipal bond is callable at a premium, the yield to call must be displayed on the confirmation if it results in a lower yield than the yield to maturity, i.e., yield to worst. Confirmations must be sent at or before settlement, and they are required for both principal and agency transactions. The name of the counterparty generally does not need to be disclosed for principal trades. Question 18. A municipal bond subject to an alternative minimum tax, AMT, is typically A. General obligation bond. B. Public purpose bond. C. Private activity bond. D. Housing authority bond. Answer: C. Private activity bond. Explanation: private activity bonds are municipal bonds issued to finance projects that primarily benefit private entities, such as industrial development. While the interest on most municipal bonds is tax-exempt at the federal level, the interest on private activity bonds is often subject to the alternative minimum tax, AMT, for some investors. This makes them less attractive to certain high-income investors. Public purpose bonds, in contrast, are generally not subject to AMT because they fund projects for the broad public good. Question 19. Which MSRB rule primarily governs that municipal securities firms must charge fair and reasonable prices, including commissions and markups, in transactions with customers? MSRB Rule G15. B. MSRB Rule G17. C. MSRB Rule G30. D. MSRB Rule G19. Answer: C. MSRB Rule G30. Explanation: MSRB Rule G30 requires municipal securities firms to deal fairly with customers by charging prices that are fair and reasonable, taking into consideration all relevant factors, including market conditions, expenses, and the overall services provided. This rule applies to commissions charged in agency transactions and markups/markdowns in principal transactions. It ensures that customers are not exploited through excessive charges. Question 20. When a municipal dealer acts as an agent in a transaction, the firm buys the bonds into its own inventory. B. Sells the bonds from its own inventory. C. Executes the trade on behalf of the customer, charging a commission. D. Takes on market risk related to the bonds. Answer: C. Executes the trade on behalf of the customer, charging a commission. Explanation: when a municipal dealer acts as an agent, it facilitates a transaction between a buyer and a seller without taking ownership of the bonds itself. In this capacity, the dealer typically charges a commission for its service. This differs from acting as a principal, where the dealer buys or sells from its own inventory and takes on market risk. Understanding the role a firm plays in a transaction is crucial for customers to comprehend how they are being charged and the nature of the service provided. Question 21. Under MSRB rules, a municipal securities firm's written supervisory procedures, WSPs, must be a. Reviewed annually by FINRA. B. Maintained only at the firm's headquarters. C. Tailored to the firm's business and updated as needed. D. Approved by the MSRB before implementation. Answer: C. Tailored to the firm's business and updated as needed. Explanation: MSRB Rule G27 requires municipal securities firms to establish and maintain written supervisory procedures, WSPs, that are reasonably designed to ensure compliance with all applicable rules. These WSPs must be tailored to the specific nature and scope of the firm's municipal business and should be regularly reviewed and updated as necessary. While FINRA and the SEC oversee enforcement, the firm itself is responsible for creating and implementing its procedures. Effective WSPs are critical for sound internal control and regulatory compliance. Question 22. Which of the following is considered a control relationship that must be disclosed to a customer under MSRB Rule G15? A. A dealer recommends a bond issued by a municipality where a managing partner of the dealer also serves on the municipal council. B. A dealer has a large inventory of a particular municipal bond. C. A dealer receives a selling concession for underwriting a new issue. D. A dealer executes a trade as an agent for a customer. Answer: A. A dealer recommends a bond issued by a municipality where a managing partner of the dealer also serves on the municipal council. Explanation: a control relationship exists when a municipal securities firm or its affiliate, or a person associated with the firm, is in a position to influence the issuer of a municipal security. MSRB Rule G15 requires firms to disclose such relationships to customers, in writing, at or before the completion of a transaction. This disclosure ensures transparency and helps customers understand potential conflicts of interest. The example given, where a partner serves on the municipal council, clearly indicates a control relationship. Question 23. The bond counsel, in a municipal bond issue, is responsible for a. Marketing and selling the bonds to investors. B. Preparing the official statement. C. Ensuring the legal validity of the bond issue and providing a legal opinion. D. Determining the interest rates for the bonds. Answer: C. Ensuring the legal validity of the bond issue and providing a legal opinion. Explanation: the bond counsel plays a critical role in a municipal bond issue by providing an independent legal opinion on the validity, legality, and tax-exempt status of the bonds. They ensure that the issuer has the legal authority to issue the bonds and that all statutory requirements have been met. This legal opinion is essential for reassuring investors about the soundness of their investment. Their expertise is separate from the financial advisory or underwriting functions. Question 24. What is the primary disclosure requirement for an issuer of municipal securities in the secondary market, under SEC Rule 15C2-12? A. To provide an annual audited financial statement to the MSRB. B. To make ongoing disclosure of material events and financial information. C. To periodically update bond ratings with rating agencies. D. To publicly announce all changes in bond counsel. Answer: B. To make ongoing disclosure of material events and financial information. Explanation: SEC Rule 15C2-12 requires municipal bond issuers to provide ongoing disclosure of material events and annual financial information. This rule, implemented through continuing disclosure agreements, ensures that investors in the secondary market have access to current and relevant information about the issuer and the bonds. Such disclosure is crucial for informed investment decisions, as municipal bonds are generally exempt from direct SEC registration. The information is typically filed on the EMA system. Question 25. Which MSRB rule addresses professional qualifications and requires individuals engaged in municipal securities activities to be appropriately qualified and registered? MSRB Rule G3. B. MSRB Rule G27. C. MSRB Rule G7. D. MSRB Rule G10. Answer: MSRB Rule G3. Explanation: MSRB Rule G3 dictates the professional qualification requirements for individuals engaged in municipal securities activities, including municipal securities representatives and principals. It specifies the examinations that must be passed, like the Series 53 for principals, and the registration procedures. This rule ensures that individuals working in the municipal securities industry possess the necessary knowledge and competency to perform their duties responsibly. Proper qualification is a fundamental aspect of investor protection. Question 26. Under MSRB Rule G11, which of the following best describes the requirement for municipal securities underwriters regarding the allocation of new issue municipal bonds? A. Bonds must be allocated exclusively to institutional investors. B. Underwriters must prioritize allocations to retail customers who express interest. C. Allocations must be fair and reasonable, considering the customer's needs and the firm's obligations. D. Syndicate members are prohibited from reallocating bonds to other dealers. Answer: C. Allocations must be fair and reasonable, considering the customer's needs and the firm's obligations. Explanation: MSRB Rule G11 governs primary offering practices, including the allocation of new issue municipal bonds. It requires underwriters to make fair and reasonable allocations, considering the customer's suitability, the firm's obligations and market conditions. The rule aims to prevent practices such as tie-in sales or allocations designed to influence secondary market trading. Allocations must be documented and supervised to ensure compliance and fair treatment of customers. Question 27. When a municipal securities firm participates in a competitive bid for a new issue, the firm is primarily concerned with A. Developing a long-term financial advisory relationship with the issuer. B. Submitting a bid that offers the lowest interest cost to the issuer while still being profitable. C. Ensuring the issue is structured as a negotiated underwriting. D. Providing ongoing market support for the bonds in the secondary market. Answer: B. Submitting a bid that offers the lowest interest cost to the issuer while still being profitable. Explanation: in a competitive bid underwriting, municipal securities firms compete by submitting bids that outline the interest rate at which they are willing to purchase the bonds from the issuer. The issuer typically awards the bonds to the syndicate offering the lowest true interest cost. Therefore, the firm's primary concern is to submit a competitive bid that wins the business while still allowing for a profitable reoffering to investors. This process aims to achieve the lowest borrowing cost for the municipality. Question 28. Under MSRB Rule G16, if a municipal bond has a call feature that could affect the yield to the customer, the firm must A. Only disclose the call feature if specifically requested by the customer. B. Disclose the most restrictive yield to worst, on the confirmation if applicable. C. Advise the customer to consult independent legal counsel regarding the call feature. D. Provide a detailed written analysis of the likelihood of the bond being called. Answer: B. Disclose the most restrictive yield to worst, on the confirmation if applicable. Explanation: MSRB Rule G16 addresses customer disclosure requirements, particularly regarding call features. It mandates that if a municipal bond is callable and the yield to the call date is lower than the yield to maturity, the confirmation must show the yield to call, yield to worst. This ensures that customers are aware of the potential for an earlier redemption and a lower effective yield, enabling them to make informed investment decisions. This rule complements G15 confirmation requirements. Question 29. A municipal bond sold with recourse means that the bond is guaranteed by the federal government. B. The issuer has an obligation to pay if the primary revenue source fails. C. The bond is callable by the issuer at any time. D. The investor can sell the bond back to the issuer at par. Answer: B. The issuer has an obligation to pay if the primary revenue source fails. Explanation: a municipal bond sold with recourse means that if the primary revenue source designated for repayment fails or is insufficient, the issuer has an additional obligation or a general obligation to cover the debt. This adds an extra layer of security for bondholders beyond the specific project revenue. This contrasts with non-recourse financing, where bondholders only have claims against the specific revenues or assets. Understanding recourse provisions is important for assessing the credit risk of municipal bonds. Question 30. Under MSRB Rule G10, what must a municipal securities firm do upon receipt of a customer's written complaint? A. Acknowledge receipt of the complaint in writing and provide the MSRB's investor brochure. B. Immediately forward the complaint to FINRA for investigation. C. Resolve the complaint within 30 days and notify the customer. D. Inform the customer that only verbal complaints are accepted. Answer: A. Acknowledge receipt of the complaint in writing and provide the MSRB's investor brochure. Explanation: MSRB Rule G10 specifically requires a municipal securities firm, upon receiving a written complaint from a customer, to acknowledge receipt of the complaint in writing and provide the customer with a copy of the MSRB investor brochure. This brochure explains how to file a complaint with FINRA or other appropriate regulatory bodies. This step ensures that customers are informed of their rights and the available avenues for redress. It's a key part of the regulatory framework for handling customer grievances. Question 31. What is the primary risk associated with a municipal bond insured by a bond insurance company? The risk that the bond insurer defaults, not the issuer. B. The risk that the bond's interest becomes federally taxable. C. The risk that the bond is called away from the investor. D. The risk of increased market interest rates, causing bond prices to fall. Answer: A. The risk that the bond insurer defaults, not the issuer. Explanation: when a municipal bond is insured, the primary risk shifts from the creditworthiness of the issuer to the creditworthiness of the bond insurer. If the bond insurer defaults, the bondholder's principal and interest payments may be jeopardized, even if the underlying issuer remains solvent. While other risks like call risk or interest rate risk exist, the unique aspect of insured bonds is the reliance on the insurer's financial strength. Investors must therefore assess the financial stability of the insurer. Question 32. MSRB Rule G14 governs which aspect of the municipal securities market? A. Advertising and sales literature. B. Reports of transactions, trade reporting. C. Professional qualification requirements. D. Customer account information. Answer: B. Reports of transactions, trade reporting. Explanation: MSRB Rule G14 establishes the requirements for transaction reporting by municipal securities firms. It mandates that dealers report all municipal bond transactions to the MSRB's Real-Time Transaction Reporting System, RTRS, within 15 minutes of execution. This rule is crucial for providing transparency in the secondary market, enabling the public to view transaction prices via EMA and assisting regulators in market surveillance. Accurate and timely trade reporting is fundamental to the efficient functioning of the municipal bond market. Question 33. MSRB Rule G38, concerning solicitation of municipal securities business, primarily governs which of the following practices? A. The use of municipal advisors in new issue underwritings. B. Restrictions on cash and non-cash compensation to solicitors for municipal finance business. C. The reporting of secondary market municipal bond transactions. D. The approval process for municipal bond advertising. Answer: B. Restrictions on cash and non-cash compensation to solicitors for municipal finance business. Explanation: MSRB Rule G38 focuses on the solicitation of municipal securities business and imposes restrictions on cash and non-cash compensation arrangements with solicitors, third parties who introduce municipal securities business to a firm. The rule requires that if a firm pays a solicitor to obtain business, there must be a written agreement, and specific disclosures must be made to the issuer. This rule aims to prevent undisclosed arrangements that could compromise fairness and integrity in the municipal finance market. Question 34. In a when-issued municipal bond transaction, what is not yet determined at the time of the trade? The coupon rate. B. The settlement date. C. The par value. D. The issuer. Answer: B. The settlement date. Explanation: when issued, WI, transactions involve municipal bonds that have been authorized but are not yet issued and delivered. While the coupon rate, par value, and issuer are generally known, the exact settlement date and the final price are not yet determined. The trade occurs with the understanding that delivery and settlement will take place once the bonds are officially issued. This allows trading to begin before the physical bonds are available. Question 35. When computing a municipal bond's net yield for a customer, a firm must consider A. Only the federal tax exemption. B. Both federal and state/local tax implications. C. Only the bond's coupon rate. D. The bond's rating and market price exclusively. Answer B. Both federal and state/local tax implications. Explanation. When discussing municipal bonds with customers, a firm must consider all relevant tax implications, including federal, state, and local taxes, to accurately present the net yield to the customer. While municipal bond interest is generally federally tax exempt, it may or may not be exempt from state and local taxes, depending on where the bond is issued and where the investor resides. Presenting the full tax picture is essential for suitability and for customers to understand the true after-tax return on their investment.